Okay, traders, welcome back to this gold outlook and case study, right? So I'm merging the two together, and we're going to be looking at where I think gold could head in the next week, as well as looking at a potential case study you could have, a potential trade you could have taken. A bit of a choppy market this week on gold, but let's see what we have. So if we quickly flick up to the daily time frame. Now, the daily time frame, again, I had pointed out this week low down here at 2277. And the reason why this is a weak low is because currently this low hasn't actually broken the last high, because the last all-time high was up here. We saw a sweep of liquidity as we didn't close above. We just wicked above. And so the overall higher time frame narrative is again shorts, but of course that could change going into the following week, right? So the daily time frame paints somewhat of a bearish picture, but the 4-hour time frame paints a more accurate picture in my opinion, and it's a better time frame to use when it comes to gold. So the 4-hour time frame again is bullish, right? So this is a breaker structure over here, right? So this is the first thing we look at, right? The 4 pillars. The first thing we look at is our market structure. The second thing we want to look at is our dealing range, right? So our dealing range consists of this swing low up to this swing high. So this is the dealing range. Let's mark that in as the dealing range. I'll just put that at the top over here. So this is what we call the dealing range, right? We have a bullish dealing range to work with. Now, the third thing we want to look at, let's label that number 2. The third thing we want to look at is our premium and discount arrays, right? So understand right now we are in a discount, right? So number 3, we'll call it PD arrays, right? Are we in premium or discount? This is how you build your edge. We have bullish structure. Our dealing range is therefore bullish. We're in a discount. And the last thing you want to consider is where are the inefficiencies or where are the fair value gaps? So now we have a fair value gap just over here, very clear fair value gap that's left from NFP of June, so 7th of June. So if we label that fair value gap. So these are the 4 pillars we look for when it comes to determining a bias in the markets. Bullish structure, bullish dealing range, we're in a discount. So the overall narrative on the 4-hour paints a bullish picture, and the reason for that is because we have this fair value gap over here to target. Notice how it's just above that 50% level, so it's in a premium itself. So this fair value gap over here is likely to be filled next. Okay, so that being said, let's now go down to the 15-minute time frame. So the 15-minute time frame has a bearish market structure, and the reason why it has bearish market structure is not because we're necessarily heading down to hell. It's simply because price wanted to get down into a deep extreme discount of the 4-hour time frame, right? So the 4-hour time frame, we've reached a pretty extreme discount over here, deep discount over here, mitigating fair value gaps to the left. So on the 15-minute time frame, when we use multi-timeframe analysis and multi-timeframe structure, what's essentially happening here is the reason why we've had this breaker structure over here, this breaker structure to the bottom left, is to facilitate for a 4-hour discounted low. The M15 has to break structure to allow the high time frames to fulfill its role, basically to fulfill its intention. And so from here, if we study the most recent price action, it wasn't the easiest week to trade. I mean, I had people in my community asking me, what's your outlooks on gold? What's your outlooks on gold, right? So the overall outlook I had on gold was quite simple. It's the basic concept of buying below an old low, right? So what we have is we had a break of structure to the downside. So we had a break up here, then we had a break over here. So we had a bearish break of structure, and we were hovering in this region over here. So basics of the market tell us that once we've had a break of structure to the downside over here, right, what do we expect in this region, right? So we have a higher low up here and we have a lower low down here, confirmed by this break of structure. Well, what we have is we have a swing high and we have a swing low down here. So the overall narrative of price that I had outlined through outlooks via Twitter, via YouTube, via free Discord, etc., the outlook which I had outlined was for price to head from a discount up to a premium, right? So this is the overall narrative in price, and this is how I was looking at price. So we have somewhat achieved that if we look at the gold 15-minute time frame, right? So again, to break things down, let's quickly go over the potential buy trade case study you could have taken, right? So we had the weekly open from Monday, the 10th of June, right? So this was the weekly open over here. So if we draw a line from that weekly open, so that's now 23 o'clock UK time, so that's roughly over here. And what we're looking for is we're looking for a weekly open manipulation, right? The weekly Judas swing, we like to call it. And this is very obvious that it's over here in price, right? So this is the manipulation, the weekly bullish manipulation, right? So this is, we want the market to move down before it moves up, and this is the concept of manipulation, right? Below the weekly opening, delineated by the red line. Very important to understand that. And so from here, what we're looking for is we're now looking for an accumulation in the form of the Asian range. We're looking for a manipulation and we're looking for a distribution, right? So this was quite a tricky trade to catch. I personally didn't catch it. I don't really trade gold, but for those who do, and it's a very popular market, what we have over here is we have price giving an inefficiency over here. So this is a buy side inefficiency. So let's label that in blue. Now, a buy side inefficiency is very important because these mark out our order blocks, right? So this now gives rise to an order block. So an order block, again, just for people who don't quite know this, an order block has three characteristics to it, right? An order block must break structure. There must be a shift of market structure. There must be an inefficiency in price, and it must be priced in either the discount or the premium. Well, in this case, we're looking to buy, and it's priced in the discount. And the reason why it's in a discount is because, again, if we quickly zoom out to market structure, our market structure consists of this swing high down to this swing low, and we are bearish, and hence we're in a discount below this 50% level. And so from here, once you have your inefficiency in place and you've had the accumulation and manipulation, we're simply looking to catch a bullish distribution, right? And how do we do that? So we have an order block just over here. So this is now an order block. So an order block is essentially the last candle or the last range before the inefficiency. So order blocks, again, let's label this in green so we don't get confused. We have a green order block over here, right? So if we quickly drag this over to the right, we can see we had price mitigated. I believe it was Thursday. Yes, Thursday the 13th, right? So this, again, market maker buy model, right? This is the market maker buy model. Again, this is in hindsight. I don't trade this pair, but again, a safe stop loss will be below that Judah swing to the left. And the whole idea of this trade, for those who are in buys right now, regardless of where you entered, the overall target is a minimum of the high left from FOMC, right? This is the minimum target I'm looking for gold, right? Anyone who's in gold buys, I expect this price to get tapped into the highs from FOMC, right? So this is at 23.42. So let's label that over here. That's 23.42. And the reason why this is a high is simply because it's a weak. The reason why this is a target, is because it's a weak high, right? The structural low is all the way down here. Notice how price has come down, produced this low, and has since then come up, right? So this high over here hasn't broken the previous low, which is all the way down here, right? So it now becomes a target in the markets, right? So for those who do trade gold, this is a potential market maker buy model that you could have taken from Monday through to Thursday. Notice the liquidity that's been swept in the previous day, lows that have been swept as well in the process. And so from here, this is the overall target over here. The next drawn liquidity, 23.42. But ultimately, we have NFP's fair value gaps to also target. And I expect these fair value gaps to also be filled coming into next week, right? So overall bullish bias on gold. And the reason for that is because we have a fair value gap over here. Three reasons, sorry. We have a fair value gap over here. We have price above. We want price to come above the 50% level. We want price to enter a premium. So we have premium fair value gaps. And arguably most importantly, we have a liquidity pool over here. Right, and the liquidity, the premium, and the fair value gaps is what drives price higher or lower. So for those who are trading gold, expect bullish prices going into the week ahead.